Hello, accounting superstars. This is Professor Don Bush. I've been a professor for about 30 years and a CPA for about that long, and I've got great ways to explain accounting, so you've come to the right place. Today's lesson is about bank reconciliations, but before I get there with that, let me just tell you I've got a website called accountingsuperstars.com. Visit that website. I've got all these videos listed by topic, so they should be easy to find. You can find what you're looking for. Boy, today has not been a very snowy day. The weather report said that we're going to have tons of snow, like feet of snow, and starting last night, and it just isn't happening. I'm a little disappointed. I like snow. I live in Colorado, and it's a beautiful place to be. So let's get started with the lesson here, folks. Hey, by the way, hit that like button, okay, and hit the subscribe button. That tells me that you're enjoying these videos, that they're helpful. And also, if you want, put in the comments what videos you want me to make, so I'll help you out, all right? So let's get started with bank reconciliation. So this is the very first lesson on bank reconciliations. And I made this lesson as simple as humanly possible. I don't think I can make it any easier here. So you'll get it. It takes a little getting used to, but you'll get it. Now, there's a couple of different ways of doing bank reconciliations. And this is my favorite here because it's really straightforward here. I think it's the easiest one to understand. So what does a bank reconciliation look like? Well, it's divided into two halves. Now, the green half up here, these are things about the bank, the things that the bank doesn't know about, all right? There's a lot of things that the bank may not know about. Maybe the bank made a mistake and they're not aware of it, so that'd be something they wouldn't know. Or maybe you wrote out a check or bought something and the bank hasn't processed it yet. They don't know about it. Or this doesn't happen very often, but maybe you made a deposit and the bank hasn't processed it yet and it hasn't shown up on your bank statement. So they're just things that the bank doesn't know about. And then down here in the blue, these are according to the accounting records or your records. If you're doing a bank reconciliation for yourself, this would be your own records. Hopefully you're keeping records, okay? And for a business, it'd be the accounting records. So what we put down in this section are things that we don't know about, or at least we didn't know until we got the bank statement. And if everything goes well, what we do is it all balances. Now, these bank reconciliations, folks, these are so helpful, especially for a business. My goodness, folks, the bank is keeping a set of records for you. You should be keeping a good set of records, and what you're doing is making sure they match. And that way you know that everything is good and your cash balance is accurate. Also, you might be assured that nobody is ripping you off too. So it's important to do these. And I think it's a lost skill. I think nowadays people don't do these very often because they just look on the internet to see how much money they have. But it is a good idea to do this. And I do this every month for myself. I've done that for decades. Okay, so that's what it looks like. And so coming down here, again, this is the easiest example ever created in the world. So here's what we have going. Things the bank did not know about: outstanding checks not yet processed by the bank. So the company, when we get to construction, wrote out some checks. They paid some bills, and the checks have not been processed by the bank. And these checks, the grand total is $500 right there. Things that the company did not know about. Well, there's a bank service charge. Now you might say, well, they should know about that, and they probably do. But it's something that showed up on the bank statement, and they need to adjust for it. I like to think of it as things that the company didn't know about. It's just it makes a little more sense to me. So let's go down to the bank reconciliation. Here we go. So all we do, folks, is we just put in our ending cash balance per our bank statement. So you got to look at the bank statement. And according to the bank statement, the ending cash balance is $1,500. Now, this top section here, these are things that the bank did not know about. And they did not know about those outstanding checks. All right, so let's go back and see how much they were. So let's go up and look. Those outstanding checks, $500 of outstanding checks. Those are checks that have not cleared the bank or been processed by the bank. $500. Now I'm subtracting it. The reason why I'm subtracting it is because, when you spend money, when you write out a check, your money goes away. A lot of times students say, I don't know whether I should add or subtract. Well, just ask yourself, is this increasing my money or is it decreasing my money? And whenever you spend money by writing out checks, your money disappears. Okay, so we're going to subtract it. So the adjusted cash balance is simply going to be $1,500 minus $500. And there we go, $1,000. So we've got half of this bank reconciliation complete. Not a lot going on this bank reconciliation. What we'll do is we'll do more complicated ones later. Okay, ending cash balance per accounting records. So according to the accounting records, there's $1,025. Now you might say, well, wait, that doesn't make sense because the bank says you got $1,500. Well, that's according to the bank's records. The bank doesn't have everything updated here. For example, the outstanding checks. And we don't have something updated either. And what it is that bank charge, that bank service charge. So where did we get that? Well, right here, bank service charge, $25. So we need to update that and say, okay, well, we'll subtract that. And a lot of students say, I don't know whether to add that or subtract it. Well, think about it. When the bank charges you a service charge, they're taking money away, right? So subtract it. It's common sense. All right, so let's go 1,025 minus 25. Well, we get 1,000. And you can see here, I'll put it in bright red here so it stands out a bit, that the adjusted cash balance for both the bank and for the accounting records are the same. And that way we know we reconciled. It all works out. Now we need to update our accounting records. And the thing that we need to update is the bank service charge. We don't have to update anything up here in the green. For instance, we don't have to update our records because of the outstanding checks. We already know about that. We wrote them out. But we need to update our records for the things in the bottom half here. So all we would do is we would debit bank service expense or bank service charge, however you want to say it, for $25 because expenses are debits. And we are going to credit cash because our cash is being reduced. So when this journal entry gets posted, our accounting records will be all up to date, and we will know that we don't have any mistakes. We've got an accurate cash balance, and we're good to go. All right. So if this video helped you out, let me know. Hit that like button, hit the subscribe button. Until next time, over and out.